Well, the establishment of SAREB has attracted an enormous amount of interest. And as has already been highlighted, there were a number of investors acquiring servicing platforms in order to prepare for the SAREB sales process. Whether it would have had the same impact had it been introduced 2 years ago, when a lot of those investors were still finding good value in other markets, we'll never know. But its timing couldn't have been, I think, more opportune. With regard to positives that can be drawn with NAMA, I think in terms of trying to find a solution to a problem, there are parallels. In terms of the problem they're trying to solve, they're very different. NAMA benefited from a reasonable degree of overseas property, also sector spread property, and indeed a lot that was in the London market, so proved incredibly liquid in terms of delivering sales targets in the early years. It'd be interesting to see now how it deals with the rump of its portfolio. SAREB, on the other hand, is dealing with an entirely domestic portfolio. It's almost completely concentrated in the residential sector, and most of that residential is empty and in locations where it's difficult to foresee strong primary resident demand. So in that respect, I think pricing SAREB accurately is going to be a challenge, and I'm not sure if it's going to be a little surprised by where some investors place that risk.
And that, in a way, feeds back to Patrizio's point there about, because if I remember rightly, in Ireland, the pricing dropped quite substantially, readjusted quite quickly, and I'm not sure it's got to that point. Has it in Spain? I don't know whether has it corrected?
I honestly don't believe it has. There's a lot more attraction and demand amongst investors for investment in Spain. I think the absence over the last 2 years, there has always been demand through this cycle. As Adolfo, as you were saying, a lot of vendors didn't like then where that demand was willing to price assets. Those, because they were majority of them were opportunistic value-add investors. The return of institutional investors is great, and I think they are finding good value. I think they would have found good value had they come to the market 2 years ago as well. But the opportunistic pricing levels that are required, I don't feel are yet there. And I think that's where we could see some risk. We could see investors within that category taking excessive levels of risk.